The real question isn't whether the world is safe enough to buy a house. It's whether you can afford to stay paralyzed for another year while news convinces you to wait for the perfect conditions that will never exist. The data from first 2 weeks of war. Everyone assumes that when war starts, mortgage rates immediately spike because of panic and economic uncertainty. That's what happened in your head the second you saw the news. So you're sitting there thinking you need to pause everything, cancel showings, pull your offer, wait it out. And meanwhile, every day you wait costs you more because you're missing the narrow window where Columbus finally has more buyers than sellers for the first time since 2022. I pulled the actual rate sheets from Thursday morning before the strikes and Monday morning after. The 30-year conventional rate moved exactly 0.03%, which is a completely normal weekly volatility that really has nothing to do with Iran. But if the wars don't move rates the way you actually think they do, what actually does control your mortgage cost? And why does everyone get this wrong? What actually moves mortgage rates? The reason you think wars affect your mortgage is because financial news networks need you to believe everything is connected to everything else. It keeps you watching and clicking. The truth is, mortgage rates follow the 10-year Treasury bond, and Treasury bonds move based on inflation expectations and Federal Reserve policy. War only matters if it disrupts oil supply enough to cause sustained inflation, which this specific conflict hasn't done yet and hopefully won't. The Fed already told us they're holding rates steady through spring regardless of the geopolitical noise, which means your mortgage rate next month will look almost identical to your mortgage rate today, war footage or not. So if rates aren't the problem, why do you still feel like you should wait?